Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Tuesday. It's April 19th. It's about 7:44 in the morning. The market's going to open up in about an hour and, let's see here, an hour and 45 minutes or so. Probably a lot sooner by the time you get to this video. But I'm always hoping to get these videos to you before the market opens to give you a good outlook for the rest of the day. If you guys are getting value out of these videos, send me an email. I want to hear from you. support@marketgeeks.com. I want to know what I could do to make your experience a little better and give you guys more value. Anyhow, we're opening a little bit subdued. We were up last night. I was looking at the futures overnight. We were up last night, but we seem to have given it all back by the morning, which is not that bad of a sign. I'd rather open lower and go higher during the day than open higher before the opening bell and come lower. The market is very, very volatile right now. We've been seeing volatility of, let me just show you the daily range so you could see what we're talking about. What I'm going to show you is the ATR, the average true range on the Dow Jones right now. And I want to see if it's been picking up or cooling off. If it's been cooling off, it's actually a lot better. But let's take a look. Let's look at a 10-day ATR. And let's see if the number's been cooling off or going higher. It's actually still cooling off. Let's move away the RSI. Notice the number is still declining. We're congesting, but we are declining. We're no longer volatile at like 700 points a day, 695 points a day. We're now moving at about $4.60 or 450 points a day, which is substantially lower. And if you look a little bit longer, it looks like things are coming back to the mean. The reversion to the mean would be probably about 271 points a day. If I had to bet, maybe 300 points a day, but not 700 points a day. So the fact that volatility is coming down is a very, 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 very positive sign for the market. Let's go a little bit lower here. I mean, a little more time. Yeah, you could see here, it typically goes up to about 400 and then it comes back down. Goes up to about 500, comes down. We are due for another downshift. So as you can see here, the average volatility is probably right around here, probably about 300 points a day, which sounds about right when you consider the up end and the low end. The fact is, though, we've been consolidating on the Dow Jones, which is a very, very positive sign. I was fearful that we were going to break this after going from 326 to 353. I thought we were going to break this, or I was fearful we were going to break this and come down all the way, kind of like what we're seeing in the communications sector. But it hasn't worked out that way. We've actually been holding on pretty good. That's very, very bullish, and that's also likely because of the basic materials and all of the blue chip stocks that have been holding up the market a lot better than the QQQ, which is made up a lot of tech stocks, which have the highest sensitivity to interest rates. So again, the fact that we're not all the way down at the base is a very, very bullish sign, and I'll take everything we can get. As far as the SPY is concerned, again, we've been consolidating, going a little bit below the 200-day moving average, but not that bad. Again, haven't been going all the way down to the base, and that's a pretty bullish sign. I'm hoping we can revert and go back up here, consolidate, and then come back up here. But right now, it looks like we're choppy without a lot of directional bias. One good thing we have going for us, and I explained this yesterday, is the fact that the bond market is bottoming out and the RSI is at the lowest level we've seen in over a year. And that's telling us, that's the RSI, that's telling us that we're probably going to go a little bit higher, which we really, really need to do before we go lower. Because the bond market is assimilating, the long bond, this is the long bond, this is 20 years and over, it's assimilating that interest rates are going higher. But we went all the way from 155 to 118. We're now deeply, deeply oversold, and I think we're going to have a juicy bounce to the 125, maybe 130 level. I'm looking forward to that bounce because I want to sell the bonds because I believe interest rates are going to go higher, which will put more pressure on the stock market, but it doesn't all have to happen at the same time. It doesn't all happen at once. It could happen over a 3-month period or a 2-month period, which is why I want to see upside in bonds. Upside in bonds means downside in interest rates. Downside in interest rates means more upside in speculative stocks like the QQQ. So the fact that this sector seems to be consolidating, or I'm hoping that it's consolidating and not going to continue making lower lows, and the fact that the bond market is overdone to the downside, right? Those are two very important clues that are telling me that the market is bottoming out in the short term. Another important clue is the put to call ratio, which is still overextended to the upside, which is telling us that there is a high influx of put buyers in comparison to call buyers. And that means the market needs to revert. We're still in the upper end of the range, 95, 1, anything in this range telling us that the market is still oversold. It needs to come up. This means the market is overbought. If we were up here, I would be telling us we need to get really bearish right now. But right here, it's telling us the market needs to get really bullish right now. And again, with the bond market, looks like bottoming out with the RSI, it looks like we can at least get a little bit of a bounce, which means shorter term, long-term rates, shorter or smaller long-term rates. Smaller long-term rates relieves pressure on QQQ, which causes tech to go higher. Again, just wanted to kind of give you the broad strokes or the big lay of the land. Today we've got housing starts and permits. The numbers have been solid. We've got Fed speaking, which I think could be more bearish for the market than the housing starts. The housing starts have been very, very solid. The numbers have not been out of whack. Typically, when the Fed data is consistent and the numbers are this tight, the expectation is so tight, I'm not expecting anything really to stall it. Even if the number's a little soft, it shouldn't make a big factor, but we're looking at 1.75 million stats and permits 1.83 million. It'll be interesting if the number will continue going higher. I think it's just going to kind of sit around this area and not really give us anything more or less. Tomorrow we have existing home sales, which will be a reinforcement for the housing starts and permits. Keep an eye on this number because interest rates are going to go higher. We may see a pullback in the existing home sales numbers, but not based on what I'm seeing from around my areas. But we do have some Fed speakers, which may put a bearish dampen on the market. Then we've got jobless claim and the biggest report of the week, which is going to be the manufacturing index and the PMI number. Now, let's talk about the nitty gritty. Let's talk about the global economy, right? The nitty gritty. Rising prices of energy, foods are adding to concerns of how the Federal Reserve and other central banks will keep inflation under control without hindering a revival of business activity. It's a give and take right now. It's a give and take. The conflict in Ukraine, which is definitely not helping the situation, which has added those price pressures, shows no signs of easing as Russia launched a long-feared broad ground offense, seeking to take control of Ukraine's east, which is this separation between Ukraine and Russia. Worries over Chinese property developers and regulators' crackdowns on technology companies were also waiting on sentiment. We don't need that right now. People Banks of China conducted a $10 billion, that's $1.6 billion reverse repo operation to help add liquidity to the banking system. Very much appreciated. The central banks, through a banking industry association, encourage small lenders to reduce the interest they offer on deposits to alleviate pressure on their finances because China is not doing all that great. China reported yesterday that its economy grew at 1.3% quarterly, down from 1.4%, which is not that bad. It expanded at a 4-point annual pace, which was better than expected. That's what I mean. The number was not that bad. But economists noted that the impact of the shutdowns, including Shanghai, which with the COVID outbreaks can cause things to get worse. In Japan, which we haven't talked about in a while, they reiterated their concern over the dollar's recent sharp rise against the yen, a consequence of divergence in monetary policies in Japan. That's on you, Japan, which is keeping interest rates low to nurse along the faltering economy. How long has Japan been in a bear market? And the Federal Reserve and other central banks that are raising rates to combat surging inflation. So Japan's going to keep their interest rates low. A weaker yen makes Japan exports more competitive, hint, hint, cheaper Japanese cars, and enhances the yen-denominated profits of companies when they convert it from dollars. But it also raises costs for imports of oil and gas. They can't have it both ways. And that's a big factor for the world's third largest economy. Now, let's talk about the nitty-gritty finally. Today is Tuesday. We talk about the best sector, the weakest sector. Nothing has changed. So let me go back. I want to show you this. We're going to go back 1 month. Energy, communication, services. That's March 16th. Let's go to February 11th. Energy, communication, services. Do you guys see why I used this scan? Let's go back another month. Now we're in January 11th. Energy, communication, services. And right now, Nothing changed. That's 66 trading days ago. The same sector was leading and the same sector was lagging. So I like these sectors right now. I still like the energy as my number one sector, and I like communication services. One sector I really would pay attention to right now is the basic materials sector, because that may see the same faith as energy is seeing right now. Because remember, this war is right at the border between Ukraine and Russia, and that's where a lot of the basic materials are mined. So that could be a big, big problem, and that's one of the reasons why, when you look at my stock fetcher scan, you will see that the top 500 stocks, if you recall, it was all energy stocks, Ignore this AT&T. I don't even know why it's doing what it's doing here. But now, Mosaic is basic materials. CF is basic materials. Nucor is basic materials. Newmont is basic materials. ADM is basic materials. So the point is, basic materials are starting to dominate, and we're moving away from energies and into basic materials. Something to keep in mind. And the ticker symbol for basic materials, which I've been propagating for a while, is still near all-time highs. This is all-time highs, and this is basic materials, and they're holding up pretty well. So I really, really like basic materials right now. Now, folks, I've got something important for you. And by the way, before I let you go, earnings. We've got Netflix after the close today. They're expecting $2.90, which is 22% less than a year ago, on revenue of $7.9 billion, which is 10% higher. These are other companies that are reporting today. To note, we've got Halliburton, IBM, international brokers. This is going to be interesting to see if people are still trading at a good rate or not. Travelers, so bank stocks, energy stocks, financial stocks, and a little bit of defensive. But we'll get a good feel for where we're headed after today. I'll do a update on earnings tomorrow. Now, folks, I've coded an algorithm designed to capitalize in any market condition, and it isolates the top stocks on Wall Street, which is what I call super stocks. All I have to do is flip a switch on the algo to get a brand new batch of trades, and I want to make sure everyone gets in on these opportunities, even you. So I've invited people to join me and other traders to capitalize on these super stocks right now. But you got to click on the link below to watch how my super stock algorithmic strategy works. Do it now. Tomorrow's video, one long short, one long. We're going to give you actionable trade ideas. Follow the link below to check out my super stock strategy. It's really good. It's all meat and potatoes, takes lots of notes. And if you're looking for the link and you can't find it, go to our YouTube Wealth Press channel. It's in the descriptor. I'll see you guys later. Follow the link. Keep an eye on the basic materials sector. See you guys on the other side. Bye.